The breaking news right now, her comments, the embargo is being lifted right now. Adam Shapiro on Capitol Hill. We'll have the highlights from Janet Yellen's remarks now. Adam.
And good morning, Maria. The Federal Reserve expects that they're going to start unwinding the balance sheet this year. We'll hear that from Janet Yellen. She also expects the Fed to continue gradual increases of the interest rates. Federal Reserve expects average neutral level of the federal funds rate to run lower than previous decades, the average there. That's not a great sign for growth in the economy. The Fed sees 2017 job growth sufficient to add new entrants to the labor force, and the Fed is expecting that GDP will have rebounded in the second quarter, greater than the 1.5% reported in the first quarter. So these are the big highlights from what she's going to say before the committee this morning when she testifies before the Committee on Financial Services. But there is one quote that I want to read to you when you dig into it that kind of sums up where the Fed stands on the economy and jobs. Additional gradual rate hikes are likely to be appropriate over the next few years to sustain the economic expansion and return inflation to our 2% goal. Even so, the committee continues to anticipate that the longer-run neutral level of the federal funds rate is likely to remain below levels that prevailed in previous decades. They're not expecting growth in this economy to be sufficient to bring us back to where we were with the federal funds rate, at least at a neutral level, prior to the recession. Maria?
All right, but she did say that she thinks that the GDP will continue to improve. Is that right, Adam?
That is correct, and in fact, when you look at the monetary outlook, they're expecting the Fed that GDP for all of 2017 will be 2.2%. 2018, though, slightly lower. They're expecting about 2.1%.
All right, we'll wait for that, Adam. Thank you. Adam just giving us the opening remarks from Janet Yellen as the embargo was lifted.